see. Okay, good. Testing. Okay. All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. Before we begin, just a quick heads up, no Morning Note on Monday or Tuesday. I will be out of the office. I'll be back on Wednesday. We got to get ready for next Friday's earnings reports. We're starting with the banks. So again, right into earnings season. I mean, it just doesn't stop. We just got our non-farm payroll report number. We'll go over that here in a second. And let's go ahead and take a look at it. We'll go ahead and bring up the actual unemployment info here on Bloomberg. Let's go and click that. Unemployment rate falls to 3.5% versus 3.7%. Let's see, payrolls exactly 263,000, estimate of 255,000. And with that being said, this is where we are with futures. Dow futures down 250 points. We were green this morning slightly. NASDAQ down about 1.84%. AMD not helping with that that actual revision, or not a revision, but a kind of a pre-announcement of their earnings ahead of time. So kind of showing some of their losses that they may have due to the slowing of the PC market. I'll read you that. Here's the headline. AMD now expects its revenue this quarter to come in around 5.6 billion, below its previous outlook of 6.5 billion to 6.9 billion. So about $1 billion that's going to be taken away from the earnings outlook, or at least in revenue wise. So that's why AMD is down this morning. We'll go ahead and take a look at some pre-market movers as well. Let's go ahead and go around the horn of futures. S&P futures down about 1.26%. It looks like we will fill that gap on SPX that we've been posting of 3,700, excuse me. Take a look at this. Let me bring this up. Here you go. 3,700. That was the gap fill that we have here. So again, with that gap being filled here, and we're still within this channel, we didn't get to the resistance yet. The question remains is, do we retest the bottom end of this channel? So that's around 3,600, maybe 3,590. Well, that's a wait and see approach. And if we do fill this gap, do we bounce? That's the other question as well. So again, the last gap that we had was right around 3,730. And then we filled that, I believe, on Monday session. So again, this is a living and breathing market, as we know. Every day, things do change. The reason that futures are down is because unemployment is too strong, and it's the bad news versus good news debate. So again, if the labor market is still too strong, that means people are still demanding goods and services. That means that you're not going to get lower inflation if that's the case. You have still too much dollars chasing too few goods, and a way to bring down prices the only way to bring down prices is to kill demand. And you would need a weak labor market, or a weakening jobs market, labor market, jobs market, in order to do that. So again, this number, again, people being employed, yes, that's good for societal reasons, obviously. But when it comes to inflation and maybe a possible pivot from the Fed, maybe not tightening as much, this is not helping. This is more fuel for that hawkish fire. So again, this is why stocks are down this morning. Russell 2000 down about 1.2%. Crude oil up about 1% this morning, 89.30. Again, so now we're starting to hit $90 a barrel. 268 per gallon on gasoline futures, up 0.15%. The 10-year, we're going to go ahead and take a look at yields. I got the US 10-year right now trading at 3.89%. That is off its highs of 3.9%. We'll chart that here in a second. The dollar is up 0.28%. Let's take a look at that dollar together. Here it is on a hourly chart. And this is the last 20 days that we have data. And again, we're now above the 200 on that. Any type of resistance really would probably be right around 113.28 to around 113.60. Other than that, we did reject 112.82. So 113 being a key number to watch for if we do get a bounce on the dollar. If we expand this out a little more, again, the daily is kind of telling us how it's been going. We're crossing over below that 20, and then we have been bouncing. Expected that we would get maybe tag that 50 MA here on the daily of around 109 or so, right below 110. We didn't get there. We got this bounce off this 20. So again, the dollar is still looking very bullish, and we need that dollar to fall if you expect equities to rise. So we're not getting that this morning. Let's go ahead and go to the yields chart. We'll start with the 10-year. Again, you could see a clean breakout in the three intraday chart. Obviously, nice little break. On the 3-day chart, again, a nice breakout, clean, straight shot. Oh, not straight shot, but a clean breakout. We'll go ahead and expand this over to the monthly. And you could see that we're still not at the recent highs, which was toward the tail end of September. That was right at 4%. So again, we know our levels, what we want to see if we want to see a bull market or some kind of equity bounce. We're looking for around 3.5% on a 10-year. Below that, if you start breaking above 4, then that's where you start seeing the S&P start breaking below 3,600 and tagging the most recent lows. Again, the equity markets need yields to fall and they need the dollar to fall. So that's a 10-year basis. Let's take a look at a 2. Again, very similar price action. You could see here on this intraday chart, kind of tick by tick, 9 a.m., we're showing about a 4.31% yield on a 2-year. We'll bring it up on a year-to-date basis. And again, we're starting to get near the high. So again, you could see here on the monthly, on the 1-month chart. Yeah, there you go. So again, we tagged the most recent highs. You could see that. I'll go ahead and annotate it for you. A little chart work. And we could just kind of connect these 2 points here. Not exactly even or exactly perfect, but again, very close to it on that resistance of right around, if we call it 434, let's call it. But again, on a 2-year basis, we need to get below 4%. So again, that's the number you're looking for. But again, we are now testing resistance here. If this can roll over or again come back down, futures and the equity markets should benefit. The 2-year is the best approach to look for short-term thinking in terms of Fed funds rates or Fed fund hikes in the future. A mouthful, I know. Let's keep it going here. Natural gas up about 0.17%. Gold futures are down this morning, down about 1%. Interesting article here for Bloomberg. Let me go ahead and read it to you here. This is from Markets Live blog. We'll go ahead and bring this down here. I'll just read it to y'all. And let's see, gold support here, bottom left-hand corner. I'll go ahead and expand this. Okay, gold support. So much for support at 1,700 for spot gold. The metal broke through even quicker than I expected. This is from the actual person who's writing the article. Proof that it's pretty hard to fight a soaring dollar no matter what's on the other side of the trade. So again, that's that commodity side. As long as the dollar gets stronger, the best thing you're going to get is probably a weaker crude oil and lower gas prices. But again, as we get into winter, demand goes a little higher. OPEC is cutting production. We'll see what happens with oil. Again, we've been kind of stuck with that 70 to 75, 70 to 75 to around 85 level. We're now at the high end, now around 90. XLE is not moving as much as crude oil in a sense. XOM is doing okay, but energy, the commodity itself, had a great week so far. Payrolls dash pivot hopes as investors throw in the towel. Again, something we just spoke about. The cross-asset market reaction shows sentiment remains bearish, as my colleague Vince Signorella points out. Factor into an ebullient trading of early this week that largely hinge on the idea of a Fed pivot. Those expectations have clearly been dashed today. A move of 75 basis points, this is important, is becoming a nearly sure thing for November. Remember, we don't have a rate decision this month per WIRP, but let's see what CPI brings next week. Big week. Again, we have CPI, and we have PPI, and we have bank earnings. Even with implied losses today, SPX is set to hold some gains this week, which leaves the index at risk of further reckoning on the upcoming earnings and inflation print. So again, every day is a new market in a sense. So take a look at that as you will. And we'll go ahead and get to the pre-market movers this morning. Let's see it. Aurora Cannabis down about 1.5%, Tilray down about 0.5%. These names were higher on the news that President Biden is pardoning any kind of simple marijuana possession. Again, it's still up to states. Maybe that opens the door to federal legalization. Maybe. If you guys remember what I was saying back in 2019 or 2019, I said Bitcoin betting blunts. Those are the 3 things that I like. Yes. Maybe we get that legalization. And DraftKings also has a new partnership, an extended partnership with ESPN. Very, very patient DraftKings shareholder that I am. So let's see what that comes out of it. Take a look at the Dow. Apple down about 2%, Intel down about 3.64 on that AMD news that I stated earlier. Microsoft down about 1.87%. That's a new short idea by Hedgeye. I just saw that on Twitter. So Microsoft under pressure this morning. Chevron up 0.37%. We still own Chevron stock. Again, I'm break even on it. I'm going to ride that. I did not add more to the position. Never got to the level that I wanted on Chevron that I saw. So again, I still like Chevron long term. Maybe want a dollar cost average that thing as we go a little higher. I may have to do that. I did buy some more stocks yesterday. S&P 500 growth ETF. Do it as I do every week. But other than that, no real money to work. Again, we got that gap fill on SPX at 3,700. Let's see if that does hold. Boeing down about 1%. JP Morgan down about 0.59%. They report earnings, I believe, next Friday. If not, it's going to be Bank of America. I have to verify and make sure. I'll make sure to send you guys on Twitter all the upcoming earnings as they go along. Nvidia down about 4.8% on that AMD note, as we know. Amazon down about 2%, and Twitter down about 0.69% with the news of Elon Musk buying Twitter, and then the kind of going back and forth on the actual price deal. AMD down about 5%, Tesla down about 1.72% this morning. We'll take a look again at futures and see where we are. And we're kind of bouncing off that 200 now. Let's see it. So again, right around this level, 37.17. More than likely, we're just going to fill that gap on SPX. Does that mean that we continue to go lower? If you are taking a look at S&P futures today, you're really watching that 200 MA right now on the 20-day chart, 37.09. If we go ahead and expand this over to the daily, again, you could see that 20-day. Remember, we were talking about that 20-day on the daily for possible momentum once you do break above that, or if when you break below it, momentum to the downside. We rejected it pretty cleanly. So again, the rally was nice. Again, I've been saying it's nice. Don't get me wrong when we have nice green days, but some of the best rally days are on bear markets. So again, keep that in the back of your head. Obviously, sentiment is very bearish. We had an oversold bounce. If we go ahead and start bringing up S&P futures on an RSI basis, let's go ahead and do that, and then we'll answer some questions. And you can see here on the hourly chart, we're now pretty much at oversold readings at a 31. Again, no secret that we're bouncing off that level there. Again, possibly an oversold bounce. Again, liquidity isn't, volume isn't the same when we actually open. If we're taking a look here, again, we're getting a 41 reading on the daily. Not exactly too bad, but again, we still have room down to those previous June lows of 36.39. Let's see if 3,700 breaks. Let's see if that 200 does break. But until then, it is a wait and see approach because we have seen reversals happen upside and downside throughout the trading. Well, we had that on Wednesday, that big reversal in the markets due to that options trade. So that we posted on Instagram, the whole details of those SPY calls. Take a look at those. All right, mouthful. Brano says, what do you think will be the bottom after the jobs numbers? Again, right here, I think once we got that gap fill on SPX, again, SPX is not open. If you guys want to see the chart again, I'll show it to you. Let's go ahead and bring up the Bloomberg terminal. And again, like I wrote down, again, that 3,700 gap fill. I think that's where we want to, we're going to go ahead and pretty much just stick there. That's pretty much my support. I think at worst case scenario on SPX, we'll probably get to around 3670 or so, maybe 30 handles below it or 20. But I think 3,700, that's just the gap to fill. And I think that we go ahead and kind of stabilize around there. Luckily, we don't have a holiday weekend coming. Usually, Columbus Day is a stock market holiday. It's not this year. So again, market's fully open. We got CPI, PPI next week. We got earnings starting on Friday. A lot of stuff going on as we get the fourth quarter rolling. Level to add AMD. Let's go ahead and chart it together. All right, AMD. Remember, keep in mind, AMD just pre-announced that they're going to have a cut in revenue. So I have my alert at 6270, and we have not hit that as of yet. Let's go ahead on the weekly, see. Yep, 6270. That gets you to pretty much a key level here from February 2020. That was the pre-COVID highs. If we can retest 6270, that's a level where I want to go ahead and add some more AMD. Again, I believe semiconductors are still, to my opinion, what crude oil was back in the 50s and the turn of the century, mid-century of 1900s. Oil was everything, or the turn of the century, the 1900s. Again, that's the new lifeblood of the economy. The new lifeblood of technology is semiconductors, chips. I own Qualcomm, Nvidia, AMD, of course. And I don't own, what was the other one? I don't own Micron, but I own those three. And seeing this price action here really doesn't give me any kind of reaction to want to go and rush and buy. 6270, yes, but until then, I'm just going to wait for my alerts and go from there. So we'll see where we go. Again, guys, we got a gap to fill. We're bouncing off that 200 now on S&P futures. SPX is not open. That's at 930 cash. So we'll wait and see where we go from there. Have a great rest of your weekend. I will be in Vegas this weekend to watch the Cowboys and the Rams. So let's go Cowboys. And go Texas. Longhorns Red River shootout at the Cotton Bowl. Not the Cotton Bowl anymore. Cowboy Stadium. Hook 'em horns, baby. Why is such a big reaction to jobs numbers all of a sudden? Well, the important thing is that the jobs market, we can't have it too strong because that still implies demand for goods and services while we're trying to lower prices. So Jerome Powell and the Fed want you, in a sense, to stop spending money. They want you to stop. They want you to stop consuming. But if everyone's working and if you have a job, you're going to consume. Usually, you don't consume when you don't have money. But if you have money and you're working 3.5%, 3.5% unemployment, well, you're going to go ahead and consume it. That's the problem. So go Texas, hook 'em horns. Have a great rest of your weekend, guys. I will see you on Wednesday of next week. I also had a question that why we don't do a market recap. We do a market recap. It's just on our Discord. This one is for everybody. Have a good one, guys. See you soon.